All right, so today's Sunday, November 3rd, and today I want to do things a little different. I'm gonna have a couple people share their charts so we can see um their progress, right? So Bernice, I made it available where you can share your charts, so if you would like to.
Okay, gotta figure it out first. Let me see.
We're gonna do this later when we do our one-on-ones too. We're gonna get more in depth.
Okay.
So yeah, you click share and then you click the screen that you want to share. Unless your settings and stuff. Oh, there it is. Perfect.
Is that me? Wow.
Let's go. Bree message me because yeah, I had the availability last week, but sometimes it changes. So just message me and we could plan something on my Discord DM.
All right, thank you.
Yep. Okay. You said now that you have NQ, I can see it's not delayed. So do you want to take a look at your NQ chart, please? Or do you trade ES or NQ?
You talking about me?
I mean, yeah, Bernice.
Oh, oh, I haven't really done futures.
Well, you signed up though.
Yeah.
Okay,
Uh,
so let's get your chart cleaned out so you can start trading.
good.
Okay, so let's go NQ. Okay. All right, let's right click the background first. Right there, and then click settings. And then go to trading. And then executions, turn that off so I don't see any of your trades. There we go. Okay, and then okay. All right, now hide the watch list. So click that top right corner. Right.
That's
Oh, one more on the right. One more on the right. Right. It's like the blue thing check on the right. Right
right
there.
over there. Okay.
Uh, all right, so let's take a look. What do you see first things first when you're looking at that daily candles? What do you see?
What do I
Let's
see?
just try to create a bias. So what do you see from just that daily candle?
That it looks like we were on an uptrend and we've pulled back.
Okay, we pull them back.
Yeah.
Okay, so I always ask people what makes price go up and what makes price go down.
Up and down. Oh, buyers.
Yeah, so when it hits a certain level, which people we call it, it starts with the L, and which changes price direction.
Liquidity.
Yes. So
Okay.
at the top, you see we have one, two, three highs in a row, and then we came down. All right. Higher high, higher high, higher high, and then we finally broke down. So, do you have how do you create your levels when you day trade? Like, let's just say this is your chart you have to trade tomorrow. What what do you
I
look
do monthly high and low, weekly high and low, and past day high and low.
past day high and low? Okay. So how would that look like? Do you use the oh can you click the button underneath your magnet on the left side? It's like highlighted. It's no, it's under your magnet.
Oh, okay.
Yeah, turn that off. Okay. So just in
Okay.
case. All right. And so yeah, let's just try drawing some support and resistance from what you have. Like how would you said monthly? Let's do the month. Let's do the weekly
Yeah,
first.
because I don't really see the support and resistance levels like that. So sometimes I'll have to go to line to actually see it because I
Okay.
want to see where they end and I don't see it like everyone else sees it.
No, that's perfectly fine. Okay, so where do you think price can go where we currently are now? Like, where's the
Um,
support now that we're gonna supposed to?
right here.
Looks like we're at some type of support, right? Okay. So let's mark out. So one thing that I do that's similar to you, but a little bit different is that when every week starts, I mark out the opening of the week. So let's go to the weekly real fast. And then where did that most recent week candle start? Can you grab a horizontal ray?
Is that right there?
Yeah, well, grab horizontal ray. So it's your favorites on the top right corner. Not right, the very right of your favorites, right there, right? Horizontal row. Oops.
That's okay, now how do I get back?
You should yeah, slide it back or something. Maybe that works. I just want to get into the mind of the trader. Okay, I think it's so far, right? Okay. So if you the horizontal ray in the top right of your favorites, you see your favorites right
Yeah,
there.
okay,
Okay. So mark out where we opened of the week.
for the week. Um, this
Where
is
did
the,
that candle? Yeah, that's the candle the whole week, right? Where did we open?
okay,
So what makes a candle red?
so we open there.
Is that where we opened?
No, no,
Okay.
that was wick. Okay, right there.
Yeah, so drag that to where we open. Okay, so it's important to know where we open. It's called the opening. Okay.
Mhm.
So now go to the daily. So every week I do this. I always do the opening week. So you see 1, 2, 3, 4,
Okay.
5. That's 5 trading days. So we
Mhm.
opened and we came up and we took liquidity at the top, which was the previous swing high, and then we pulled back. Okay,
Oh,
so anything underneath that green line would make the whole week red. You see, we're green for the first 2 days, basically, 3 days. And then the last 2 days of the week, we were just red, red, red.
wow, that really changes my perspective on this. Okay.
You see that?
Yeah.
So when
Uh-huh.
we start turning red, that means we got to look if we swept liquidity at the top, which we did. So when we sweep liquidity at the top, what do? We look for try to take out some type of liquidity at the bottom, and that's how price oscillates. It goes up, it goes down, it goes up, and it goes down. And every time it goes up and down, there is some type of internal liquidity or external liquidity that has been taken. Does that make sense? So taken means it's just a higher high or a lower low.
Okay.
You see that there is a higher high and there's a lower low in what you see, right? So that's a higher high. All right, from
Mhm.
like if you go to the previous swing highs, like the previous high, right? You just like
Right here.
and
Right here.
more on the left, right there. You see how we had a
Okay.
high and then now we had a higher high. Now we're so that's called a liquidity sweep.
Okay.
So once we do that and you start seeing pressure come down, look where we took out that big red candle's low wick. The in the middle.
This one?
Yeah, you see how the bottom wick, the bottom, the very low. Yeah, see, that's the very bottom right there. That's liquidity, and you see how price came down and took out liquidity.
Yes.
Okay, so now knowing that, can you mark that red candle low that I just told you? Yeah, just take a horizontal ray and then just tap that. Okay, so now go to the hourly. So now, yeah, so take a look at the beginning of the week and how when we price started coming down, right? All those now the smaller those are the bigger time frame lows, right? The green, right? The green is the opening and then the low of that week, right? So all those little wicks at the lows are now hourly swing lows. Do you see that? Yeah, that wick is the hourly swing low on the left side. Like you see those any swing any wicks, you see the wicks right there on the more left, one box to the left. Right there. You see that wick right there?
Yes.
That's a swing low. Can you mark that one out too?
Yeah.
Do you see any other wicks that are higher on the right side that we broke below?
Right
Right there.
there.
Yeah, so mark that one too. So when price takes out liquidity at the top and we start breaking those wicks are support, right? Those are liquidity. So liquidity, I was telling somebody in a different one-on-one, is that when we move towards liquidity, there's like two things that can happen, right? We either tap it and reverse, or we break through it. Okay, so when we break through it, then we start looking for the next liquidity. And we break that one, we start looking for the next liquidity. And that's how we create our bias for our day. And it starts with the opening week print. Does it make sense? So wherever the
Yes.
week starts, we want to see if it expands up or expands down. And just because it goes one way to start doesn't mean that it can't go the other way to finish, because when it goes one way to start, that's creating a wick. And when it goes the other way, that's creating the body, and wherever it ends up, that creates the wick. So understanding that this is that the whole entire drop down, a huge big move down, was the entire week just going for liquidity. So weeks like that are easier to trade because you have a clear
Big
target.
range.
You have a
Oh,
clear
you have a clear
no.
target.
Yeah, so those green lines are your targets, and
Oh,
all of them have been touched. You see. So now go to the 15 minutes. So you see how now the price, those lines that you created, they were already there before the big move down, right? Because that is all past data. So you're grabbing liquidity to show you your past data as targets. So every time you look at the current candles, when people send their screenshots, I always try to see if they're showing me where those lines came from. And when they don't, that lets me know that, hey, they're only zoomed in onto one side and they may have missed why they're going there. So if you can show me why you're going there, then you could show how you can get in to finish the job. Does that make sense?
I think so.
Okay. So understanding that, right? It's like, so just by looking at all right, so try to find for me it's 6:30 Pacific time. So when we open on, let's say where we open on Wednesday. Where did we open on Wednesday? If you could find the time.
Wednesday.
At open, market open. That's PM, right? That's 9 PM.
Okay.
Keep going right. Keep going right. For you, it's 9 AM, right?
9:30.
Okay. Yeah.
Yeah, 9:30. Okay.
Okay. So actually, you have the paid version, right? Can you do a replay to the 9:30 on the very top? There's a rewind button.
How do I get rid of this? I don't even know why that's up here. Do
All
you see
right.
this? All this stuff?
No.
Oh, you don't see it. Okay.
Okay. So I click the rewind button right there. It's in the middle of your chart, right there.
Right there.
Yeah.
Okay.
And then go to the 9:30 Wednesday open. Okay. Okay. So now go to 5 minutes because you're a day trader, right?
Yep.
Okay. So let's take a look at hold on, let me get this chart open. Okay. So no, don't exit it. Don't. Okay, so make it bigger, and this is how the price looks like at open on Wednesday. So that's why a lot of times it's important to see how price plays out, but when price starts moving in the direction, so let's just push next. You see the bottom next on the right? No, it's just the very next one. There's a play, and then the next one where you see the play sidebar play in the bottom.
Ooh.
There, you see the play a little higher, lower.
Yeah, because I'm on
You're
my
right there. It's right where your mouse is, but lower, right? And to the right, there's a play button, right? But don't click the play button. Just click the, oh, you're not,
because there's something. It's maybe you don't see it. It's this whole thing that's on my chart.
oh, really? I just
Yeah.
screen. That's why. That's crazy.
Oh,
Is there like
it's
an ad or something, or what was?
no, it's the audio video participants. Maybe
Oh,
it's
that's a Zoom. Oh, you could just
yeah.
drag that and slide it somewhere else or hide it or
Oh,
something.
okay.
Yeah, that's a Zoom.
Push
No
it.
wonder. Yeah, just make it smaller or something. Yeah, you could hide it.
But yeah, I don't know how to move it. Oh, it's pretty big too. Okay, so you said right here?
Yeah, so no, to the left of it, right there. So just keep
Okay.
tapping that a couple times and just let it play out, right? And just keep tapping it like until I say stop. All right, so we're seeing price as it's building right here. Just keep going. Yeah, its price is building. What are we establishing? Are we making lower highs and lower lows? Yes, right? These are lower highs. So you can keep tapping it. Like 1, 2, 3. And our job is to try to get out of that range so we can go lower. And once we start getting a little bit lower, then we know where price should start wanting to go. Okay. So just keep going. So this day is playing out, right? This day is playing out, and you see as price is going, where are we heading down towards, right? So now, if we are still above it, is the weekly candle still green or is it red?
If we are still above that
That
first green line,
yeah, that first green. Are we a green weekly candle or red weekly candle?
we should be a green line if we're
Yeah.
still above it. Yeah.
Yes. Yes. Okay. So go, keep going a little faster now. Click 1, 2, 3, 4, 5. Yeah, just let us get there. So right there, boom, right?
Okay.
So that's letting us know that okay, usually what happens is that when we get down to right there, just keep going a little bit more. I want you just to get to where we gap. There's another like a little gap that happens. Wait, pause it. Did I miss something? Because at 13 or 15 o'clock for me, which is 18. Did you hit 18 for you? Oh, you have it on the full time like that? Let me see.
Yeah. So 18 would be what, 6 o'clock?
Yeah, 6. Is it 6 o'clock? Yeah, 6
Yeah.
o'clock. Yeah. So now zoom in. Can you zoom in there?
How do I do that?
There's a you know what a magnet is? There's a plus right there. Yeah. And then just click that and then draw a square around those candles. So it'll create a square. So click it and then around that gap where we came. Ooh, all right, scroll down a little bit, scroll back a little bit, and come up a little bit. Like
Uh,
right, like keep going higher, like go a little higher. I want to see a little candles.
okay.
You see how we gap down? So one of the tricks is if we gap down, typically what we like to do is not fill the gap right away. So we start expanding. All right, you see how we gap down? That's the next day. So now every single day, I'll take a horizontal ray, take a horizontal, and click where that red candle opened.
This one?
Yeah. So now that's letting me know on Tuesday, as long as we're below that, we are going to continue the week down, and that would be a red daily candle. So that's how I use my levels to get me to the next liquidity. If we're
So third,
low, the daily,
Thursday?
that is what, Wednesday? Yeah, that's
Yeah.
Wednesday low, yeah. So that's Wednesday that carries on to Thursday. So that's a daily.
Okay. Okay.
So anything below that, that's why I color coordinate and there color coordinate everything. But you see how we immediately gap down and we push towards liquidity. So that means that you can trade after hours to take you to liquidity. It doesn't just have to be market open. You see how we got
Oh,
straight there?
yeah.
Yeah. And that's our target. And you see how many points that is? Like 50 points, right?
Ooh, yeah.
So the
Yeah.
goal is only to capture 10, 15, 20 points. That's it. So that's how I try to create my support and resistance, not based off of any levels, but just based off of the opening of the candles and then the wicks. That's it. I'm not trying to
Okay.
create like, oh, this touched 5 times. No, like I'm just trying to create the important things to look for, and then you can build your strategy around that.
Okay.
Yeah. So like all right, let it play out
Can
more.
can you repeat that one more time, that last part of what you said?
Yeah, I'm not trying to like clutter your charts, right? If you're learning, I just wanted you to be able to mark down the important like levels, not levels, but like the highs and lows of the wicks and then the body openings to help you with your market structure instead of just trying to take the highs and lows of the range. Because if you do that, you don't know what to do in the middle. But if you take the opening, that's not the middle. I mean, it's not the highs and lows of the candles, but it's the important parts. Does that make sense? So if it's below it, it's going to be red. So we're looking for expansion down. to take you to your targets down. That's letting you know the trend is going down because we're below where we opened. All right, we're below our weekly now, we're below our daily now. And so when it's a red hourly, that's full time frame continuity to the downside. So we're looking for smaller time frames, like a 1 minute or 5 minute, to be green so we could short it. Because the weekly, the daily, the hourly are all red. So we're looking for smaller time frame greens to help us get in and continue the trend down. Does that make sense? You
So,
guys in this-
so we're using the smaller time frame for entry levels.
Yeah, just to go the opposite, like the opposite, right? So let me just try to find an example of try to get you an entry. But we had that low right there. Do we have another low at 261 or 26? Bernice, can you zoom out a little bit? I just want to make sure we have another target. So zoom out or zoom out. Yeah, so right there. Oh, wait, yeah, zoom out a little bit more so I can see more levels are gold. So what you could do is just zoom out with your screen or whatever. Click that or whatever.
Like that.
Yeah, right click, just in case to get that magnifying out of the way. There we go. All right, zoom out so I can see more lows. We're trying to find more support. So zoom out and I want to see left. Every time when you zoom out, I want to see left. Okay. And go down a little bit. I want to see liquidity. Yeah. So
Oh, yeah.
can you mark out
We're
some
gonna do that.
liquidity right there? I have one at
She's got planned for the week. We're gonna have to check her. You are.
okay. Okay, so make it bigger. I mean the time frame. Let's make it hourly just so we could see better. It's very hard. And it's good to know how you guys chart as well. Okay. No, that's fine. Okay. Okay, so 261. Perfect. We see a 261.75, right? That's the next level. 20, 261.65. You already have it marked in green. I see it.
Okay.
Okay, so now let's go to the 15 minutes again, and then let's let it play out and see the price get to that level, just so you guys can train your eyes, because you guys now marked out liquidity and we see that we're in a downtrend on this time frame. So so push next on the replay button. Just keep going until we just get down. Okay. Okay. Can you zoom in a little bit more just so people can see? Sorry. Yeah, just zoom in a little bit more and make it candles a little bit fatter. Yeah, you drag the candles all the way to the right side.
Are the candles today?
Just drag it all the way to the right side so you can see where it's gonna end up. Because I always want to see where I don't want to just see the current candle. I want to see where it's coming to. Yeah. All right, a little bit more and skinnier, just slightly. You know what? That's fine. Let's just play it out. Let's just play
Okay.
it out. Yeah. I just want to see more. You see how we're building the lower structures? Okay.
Yes.
Let me see. And then we're gonna start looking for some green candles to come in. So that's a 15 minutes, right? And when we get green candles coming in, keep going, keep going. I want to start seeing some green candles. All right, slow down.
Okay.
You start seeing, you remember oh, stop.
Wow.
Okay.
Mhm.
So remember, our goal is when we see a full downtrend, we're trying to wait and see if we can get a price to start showing that it can go lower. So let's go to the 5 minutes now. Okay. And we see all these candles. Our goal is to see, do we have some type of liquidity or that we can use right here. So do we have a fair value gap that we can run into?
Over here or over here?
We always use the left side to help us
Okay.
get to the right side. So no, we want a price to run into a fair value gap.
Oh, okay. So let's see. This one?
No, we want it to run into one. So left's on the left.
Okay.
Yeah.
Over there. Yeah. So we're going
Okay.
something like that.
Yeah, we could draw one right there. How do you draw one?
Can
you show me? I
it's like
forgot.
a rectangle.
Yes.
Magnify on.
So it's a 3 candle structure, right? So just draw from the bottom low to the right low. Right. So it's a 1, 2, 3. So 1, 2, 3. Oh, to the third candle. So
I
put
think you
the
have to take off your magnet. Her
Yeah.
magnet's going
magnet
off.
is good. I like the magnet. It helps. Okay.
Bigger. So it's right. So is it like right here?
Yeah, it's there. And then
Uh,
it's a gap in between that red candle, right?
Right
So,
here.
yeah.
Down there.
Okay. And now drag that all the way through. Okay. And then there's another fair value gap above it on the left. It's a small one as well. You see it?
Left to the left.
Yeah, it's right there. You see that one? So there's two fair value gaps right there.
Shoot.
Rectangle right there. It's also one of your favorites as well. That's why we favorite it.
Mm.
Okay. So there's a tiny one right there as well. Okay. So there's 2 back-to-back fair value gaps, right? You can just drag it like there and then grab the middle of it and drag it over. Yeah, just drag it over.
Now come up here with that whining, man. What's up, bro? What's up?
Okay. So, yeah. Okay.
Mm.
So there's 2 fair value gaps there, right? So when there's price comes breaks support, so now zoom out slightly. I always tell people to draw a fib. Okay, so from the fib, can you grab the fib on your left side? It's underneath your horizontal ray, not that one. Yeah, that one. Okay. So I always draw it from where we broke structure. So where those fair value gaps started coming, you could make it skinny still, like pinch it down lower. All right, every time we break structure, which was that previous low, and then we broke it, creating fair value gaps, we take the high of where it broke on the very top. So very top, all the way higher, right there. You take that high, drag it to the low, and that's called the dealing range. Okay, so all the way down right to the low, right there. That's the dealing range. Because remember, to the wick. Take it to the wick.
Okay.
Okay, that's close enough. Okay, so when we break structure and we're in a downtrend, you're good. When you're in a downtrend, remember I said we're looking for green candles to take us down. So we're not going to just buy, oh, this is the bottom. Are we not in discount for shorts? Right?
Down
Because we're trying to go short. Yeah, because we're trying to go short.
Yeah.
Why do you have the fib, right? The range is a fib. Anything below 0.5 is chasing. So we want price to get to 0.5 so we
Okay.
can start looking to short, because the weekly, the daily, the hourly are all showing that we are red. So on the replay, just push next a couple times. Keep going. All right, we're hitting that. We're respecting that fair value gap. Keep going. This is the last fair value gap that we can respect. All right. You see how we started rejecting fair value gaps? That's what happens at fair value gaps that we look for. Okay. You start seeing a little bit of consolidation.
Yeah.
Keep pushing. All right. And our goal is to see, okay, that 0.5 is our support now. So if that's a 0.5 breaks, then that's where you could start looking.
Oh, wow.
See that?
Ooh. That was a big one. Yeah.
So that's a 5 minutes. Obviously, like within the 1 minute, you'll be looking for an entry, or you could just start getting in your position, because that is called discount. And we start creating those highs, and then we start creating lower highs. And look where price goes to. All right. So zoom out. And then pinch it so I can see where it goes. Look at that. We went straight to your last level.
Wow.
You see? So that's how
Okay.
you create support and resistance based off of just looking at the wicks on the bigger time frames, the lows, swing highs. And
Swing lows.
get
Okay.
in, we wait for the green candles so we can continue our trend down. We don't look to go long now. We're continuing the trend down. I will drop this on YouTube, Queasy. I got you. Does that make sense? Does everybody in the chat understand what why we did that? Put in the chat, please, so I can see if this makes sense. And I'm having Bernice show just because every time I draw it, sometimes I move too fast, and I want it to be able to where other people could follow along as well. All right, so that's just based off of support resistance. Okay,
Wow.
what
Okay.
is your take on that? What is your take on that?
Um, that was nice.
All right,
don't know. I'm glad you're recording it so I can go back over it.
okay, so let me give you one more gem. Go to the 4-hour. Okay, so let me see those candles, and then you could what you can do is you could just right click the background. So anytime you're like yeah, click reset chart view, and I'll always take you there.
Oh, okay.
See? Okay, so right there, what we're looking at, right? Do you see a fair value gap on the left where price, because our job is to try to figure out where price will end so you can start getting into your positions or catch reversals. So looking at where price is right there,
Right here.
but where's the fair value gap that we could run into support? We're looking for support now, something like a support us.
Hmm.
So where's price going to stop at? So where's liquidity? You know where liquidity is? Right there, right? So
Yeah.
if you don't see anything, a fair value gap there, what do you have to do? Look left.
Look left. Okay.
Are there any fair value gaps there?
Um, um, I don't know.
Those are fair value gaps, right?
These?
Yeah, isn't the fair value gap the gaps in between candles?
And we need big candles in order for that to happen.
Yeah.
Right. That's what I was thinking.
So the fair value gap here will be the 3 green candles to the left in between those two, the last top and the bottom top right. Am I correct?
You are very correct. So now that he explained it to you, you see how there's a gap right there that your cursor is at?
Right here?
Yeah, there's the red doji, and then there's a big green candle, and then there's a big green candle, and that where that doji starts, that red doji in the bottom,
Down here?
draw a zone right there. A rectangle right there. Rectangle.
Wait a minute. Rectangle.
I've been learning.
Yep, that's the
So
support. Yep,
from here?
that one's in the next the next candle right there. On the right. Right there, the bottom, right? Bottom of that candle.
Bottom
Right
of this?
Yes.
Okay.
Now drag that all the way through. Okay, all the way through. Yep. So that's where we try to look for our support. You see? So now, knowing that that's the last fair value gap there, there's no other fair value gap in that in whatever we see right here. So let's go to the 30 minutes.
That's what I was gonna ask you. Do you do it from a bigger time frame going down, or do you find it smaller and then confirm it at a bigger time frame?
Well, I'll do that one, and if we because I'm looking for where price is gonna land because it's coming in hot. So I'm trying to look for where price is gonna stop so I can stop trying to go look for shorts. Because once we hit a fair value gap, then I have to chill out on the shorts. All right. Once it takes out all liquidity, I have to chill out on the shorts because we have to look now to where the price can go. But if there's a fair value gap and liquidity right there, then I expect price to keep coming down so I can take both of those out. You see that green line at the bottom and that fair value gap below, right? Those are the last two targets.
So after that, we should be looking for a reversal here.
Well, we should look for price to kind of consolidate a little bit. And it's up to the price to let us know, are we going to drop below that support? And if we do, we have a bunch of liquidity we can target, right? All that liquidity on the left side, if we break support, those are our targets, okay? But if we bounce there, we have to let price make higher high and then a higher high so we can start targeting the other side. But we need a high and then a higher high in order to really confirm that we're going to change directions. Till then, we're going to expect price to slow down once it hits fair value gaps. And then we can't anticipate, oh, because this happens, it always happens, because that's not how trading works, right? But we know that price is going to move towards that fair value gap, and it's up to us to wait until the consolidation period is done. Because if you look at all those candles, how like all those candles that's currently right there, you see how once we hit a certain level, we chop around a little bit. You see how all those previous candles, they show that we're chopping and chopping. So we have to wait till those big candles break out so we can start targeting liquidity. Does that make sense? So it's gonna chop, but and it's probably gonna start chopping once we hit the fair value gap, but it's up us to wait so we break out. Does that make sense? So let's go to, hold on real fast. Hold on 1 second. Sorry. Okay. All right. Yeah, so let's go to the 5 minutes and let's try to see how price starts pushing down and see how it gets us to where we want price to go. Okay. So keep going till you see green candles. All right, stop. You see how the candles are so small you can't see if it was green or not, right? So you always gotta make it big. All right. That's big. You see those green candles are giving you an opportunity to get in. So let's go to the 1 minute. Because now we're getting closer to more present day. You see how those green candles, they did the same type of price action. When we start coming up, we look for price, so make it bigger, so our magnifying glass, and then just highlight all those candles in those areas.
Right here.
All the whole entire green, one green to the next green.
Okay.
Okay. You can zoom out slightly. Slightly. Okay. So do we see a fair value gap that price ran into when we're creating all those green candles? All those green candles, remember, we want to look left. Yeah, we want to look left because we want to find where we're running into because we're looking to go short. So when you see green, we look for resistance. So the resistance, you see the previous swing high, that little red hammer on the left side, the evening star, left, right there. Draw, yeah, so draw a horizontal ray. Okay. Do we take out liquidity? Kind of, right? And do we
Yes.
run into a fair value gap? Which is left of that wick. Is that a fair value gap?
From here to here.
Yes. So can you draw a horizontal, I mean, a box or a rectangle?
Is that it?
Yes. And then just drag it through the middle.
It does. When you're looking for the fair value gap, do
Yeah.
you look to it from like left to right, or it
Always
matters
left to
going
right, yeah.
up or
Left to
down?
right. Well, it goes left to right all the time, and it's up to us to figure out is it an uptrend or downtrend. So if it was an uptrend, yeah, it would be left to right. But let's just take the you have a does she have a win? You have a Mac, right? Can you do Option I
Oh, where is that at?
on your keyboard? Option and then I.
Oh, option.
So that's how you do it if you're looking longs. Does that make sense?
Oh yeah, okay, I see.
It looks different when it's going short, but that's like you use the fair value gaps the same way. We're breaking out and we're tapping support, and then we tap it again. And then when we start pushing up, we target the high of that range. You see that range right there? We're about to hit it, right?
Yeah.
So that's how you trade. You just target the highs right there. All right.
Got it.
And then you see how we had that other fair value gap right there. Can you mark out that that green fair value gap?
Right here?
Yeah, a little higher, one higher.
Yeah, right here.
See if that one ended up touching. Did that one end up touching? It didn't, huh? Okay, it didn't touch, but yeah, sometimes it breaks out and retests that green doji afterwards. Milena has a question.
Okay, right there.
You gotta mute yourself, Milena.
Okay, so I have a question, right? So then, when Bernice was looking at this when it was the inverse, when it was the regular way, right? What you did, you said you were looking for where it could potentially stop. But then I think what you saw a liquidity being taken out. But then when you saw that, you then look left to see if there was a fair value gap in the liquidity, like where that liquidity was set. You then, is that like step 2, like look for the fair value
Well,
gap to see if it went
Well,
in
the fair
there?
value gaps
Or?
first. Okay, so Bernice, can you option I too one more time just so you don't actually get stuck in this mode? Okay. So yeah, so what we do is we have a fair value gap there because we broke down from that level and we saw a big red wick. So that's called a swing high, right? So we're looking for price to return there, and it so happens to have a fair value gap there as well. So that's letting you know that we're gonna have some resistance there. And once we sweep liquidity, then we start seeing price push down, and you can anticipate where price wants to go now because we're following the trend. Those green candles are letting us know that it's trying to give us an opportunity to get in for shorts, not to switch trends.
Okay.
So I
Oh,
wanna-
that's what you're doing. Oh, that's what you're doing. Okay, sorry. Okay,
We're
thank
just trying, yes, when you see green, we're like, good, so I can get in now for shorts.
Okay.
Because remember when I entered that trade on Friday, I got a little scared because I was entering when price was dumping, and it started going in my favor afterwards. Because I had to go against the trend to get in to get the best entry. If I'm chasing, if I see all those red candles like 5, 6 in a row and I'm going short, and then I get those 2 green candles, I get scared out of my position and it keeps pushing down. But those green candles is where you want to enter. Like around those green candles, right? So you see 4 or 5 in a row, we're like, we're in a downtrend. All right. And then we start seeing a little bit of rejection. You see a sweep. Okay, then I could probably try to get in there and then have a 10-point or 15-point stop loss. But that's already after it has ran up a lot, you know, it already ran up like 70 points right there, right? I don't know how many points that is. 70 points, 80 points. It ran up 80 points. So if you enter one around the highs, if it runs up another like 10 points and stops you out, that they went up 100 points, but you at least let it run up a lot. So where it's okay, it's overextended probably on the 30 seconds or something, you know? Does that make sense? So now zoom out a little bit and let's just see where price ends up going. So you can right click the back, and reset chart view. Okay, and then yep. So just keep playing, just let it play out and then just see how eventually what price wants to do. Okay. Keep going, keep going. All right, you see how that support is now being rejected? Just to keep letting it play out, keep letting it play out. And this is why you have fair value gaps as support. Let's see. It's on a little bit
How am
slow.
I supposed to remember all of this when I'm taking this trade?
You want me to go to a 5-minute?
Yeah, let's do the 5 minutes. It just makes it a
Okay.
little bit better. Because I just want them to see how what happens at support. Can you make it a 10 speed?
Here.
Yeah,
Uh,
there we go. And just let it play out. And just play.
Just play.
Just let it play out. You see how we gapped up right there a little bit, and then we kind of continue price a little higher. Okay, so can you make it skinnier while it's kind of still playing out? Make the candle skinnier. Like pinch it closer together. Yeah, there we go. Okay, you see how that support looks like? It looked like we broke below it for a little bit, right? But where did we get that fair value gap from? What time frame? Do you remember?
No.
It was on the 4-hour. So even though it looks like we broke below on the 5 minutes and close, go to the 4-hour. And then, yeah, right, reset chart view whenever you're lost. Now zoom in. Look how price respected that support for that small time frame. You see that? It didn't
Yeah.
close below on the right side now. It didn't close below, but you see how price reacted at the fair value. That's why I like fair value gaps. That was us using the 4-hour fair value gap, guys, to give you a bigger support so you can day trade on the smaller time frame for a bounce. So you can look for longs for short-term longs to take you to the next fair value gap. And if you see how price came up to that fair value gap and wicked, you see that big red wick on the second candle on your 4-hour right there. You see, if you look left, is that a fair value gap right there? Right there, no, that red candle.
This
Right.
one?
Yeah, is that not a fair value gap?
Here to.
Does that make sense?
Here to here?
Yeah.
No.
That's a fair value gap. Is that not? So make it closer. Zoom in a little closer. Remember, it is the gap in between. And whenever you get a big candle, there's a gap.
Right.
So from that one green to the next green is basically the fair value.
Wow. Yeah.
Okay. So now that's how you could play range to range. So now go back to the 5 minutes one last time. Okay. You see that green, that is where we came back up to. So that's how you could play from one fair value gap to the next fair value gap. You see how we went down and up. So make it a little bit skinnier so you can see you see how we bounce off support and we started making highs. So that's right here is not the most optimal trading environment, if you could see. But what we could establish though is that support was being respected throughout the day. And that's why
Yeah.
some days it's important to know that there's not always a trading day for you that fits your model. As you can see, the candles were a little bit choppy on the most recent day. That's why, and when I was trading live, it ripped after I got off. But you see how many candles it was printing that looked like dojis? It was like doji, 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 doji. And I was like, all right, I'm probably just gonna get out of here. And then it just ripped. But I knew it was supposed to pop up, but it was just a little frustrating because of the price action at the end of the day. But yeah, so any comments on what you guys see today? What you guys learned today? Does that make sense?
Yeah, I just got to replay it a couple times.
Just gotta replay. That's why I'm recording this class, because now people could see how to draw it without me drawing it really fast. Because sometimes I draw it too fast and people can't follow along. That's why I realized after doing a bunch of one-on-ones. And especially you figuring out on your own how fair value gaps are supposed to be drawn. Okay.
Mhm.
And you saw how we explained it together, right? We saw all those candles dropping and we're trying to figure out where price wants to at least slow down and bounce. And you found it on that 4 hour, and then we went on small time, and now you see how that's support. So you could use it for the next day. And when that breaks, now we can look like, okay, are we breaking fast? If we do, we have targets below. So the only thing that you guys should be really focusing on this next week is where is the price wants to go? Does it want to go to the liquidity above, or does it go to liquidity below? And what is our support and resistance using fair value gaps that's going to support our thesis?
Wow, that's pretty good.
Okay. So yeah,
Yeah,
I think I get.
it
You
really did hit our levels, the levels that you put there.
all the levels are, and then now once all those levels are taken out, you can eventually delete them and then find out our next previous swing highs and remember how we got them. Remember horizontal ray at the swing highs and swing lows on bigger time frames.
Okay.
And then on smaller time frames, we follow the same concepts like a liquidity sweep, but on like a 1 minute that changes directions to push us where we want to go. So let's say we're looking bullish. For example, we're not though. Let's say we are, and we see how we got those two wicks, those two green wicks at the bottom right there. Right, those two wicks. That's a liquidity sweep. So if I was bullish, and I made my thesis off of a 1 hour, and I see a 5 minute liquidity sweep, then I'll be looking to try to long to those highs right there. All right. If that wasn't like that's just an example, but that's what I would do. I would if I see a
So
sweep
if we
right there.
get down there, you're saying that if we get down there,
No, we already did. That was a sweep. A sweep already happened. You see the other wick, the other green wick right there. We already took it out. So if I was long,
okay,
I would already start looking long because I saw a sweep happen already, and I saw it already bounce off our support. Then I would go long because I would think this is a legit bull flag. You see how that looks like a bull flag? So you need context. It's more bullish because on the 1 minute because the 4 hour bounced off support. That's just an example. I'm not saying it will because the market opens up in 3 hours or whatever, but that's how I would plan my bigger time frame supporting my smaller time frame.
nice.
So yeah. But those sweeps is what you gotta be looking for. Sweeps or bounce off support. You see how that green line right before, if you go lower to the left, a little more where the green line, we saw how we swept down there and the same thing happened. You see the bottom, on the very bottom of it. Very bottom. You see that low right there? That's tweezer bottoms. But then if you look slightly left, we swept that left.
Okay.
All right, we swept that left, and that's how we go up, right? Or the other one up top too, right? So we keep sweeping, and when we sweep, you see that one red, and you look left a little bit. right there. We swept that one.
Mhm.
So I'm looking for that type of sweeps to continue the trend up for us.
Okay.
You see how we're doing it
How
every
did
time?
we not know that it would go back down there?
Because it bounced off the 4 hour or the 4 hour fair value gap. So we're
Yeah.
gonna guess because that's our support that we drew up. So it's
Okay.
nobody else's support but ours,
Okay.
and that's why we drew it. And then once the reason why it came up and we swept right there, and then we made higher lows after it hit our support.
Mm-hmm.
So that's why I'm gonna keep looking for higher lows, higher lows, higher lows, higher lows now because we already hit our support. Higher highs, higher lows, higher highs, higher lows. That's what we're doing. All right.
Wow.
And every time we have a higher low, higher high, there's some type of sweep that pushes us there. You see the very high we swept and came down? Right on the left, you look left of it. Boom, we swept. That's a sweep. We came down.
Okay.
All right. And then now once we made, but in the bigger trend, like this is 5 minutes, but the hourly, I'm looking for more of a retracement. That's why I'm looking for short-term highs as target. I'm not looking for us to go to all-time highs from here, but I'm looking for us to take out those other swing highs right there that you see on your chart. All those little mini highs, those are my targets because those are other people's stop losses. People are putting their stop loss right above that. So I'm targeting just to get us there and I'm out because I'm trying to get out when they stop them out and they're trying to stop you out.
Mhm.
Okay. So should I look for trades on the 4 hour, 1 hour to find my entries on the 5 minutes? Yes, absolutely. Absolutely. You should always do that. Hourly, but I start in 3 hours. All right. There's gonna be a new daily candle. So go to the daily candle and in a couple hours, I want you guys all, whoever's in this class, to mark that out. Okay. So whenever the new candle prints, I want you to put a horizontal ray where the candle opened. And for the rest of the week, you could label it too. Just put a weekly open. A lot of people do that, right? The WO weekly open. Title it. Put it on the right side corner so it's not in your way. And you know how to do that, Brady? How to title it?
Over here?
Yeah. So just double click on any of those lines.
Oh, okay. On any of these?
Any of them. I just want to show you. Just double click it. Just double click it. Okay, so to click text and then click text again. And then I know a lot of you guys use your phone too, so put like 8 or 10 to font or put 10 font. And then on the bottom right, it says bottom, put center, I put on the right side. You can put bottom, it's okay, or it doesn't matter. But on the center part, put right. Okay, now type in weekly open or WO or something. And then make it a lot. There we go. Okay. And so now, so if you go on your chart, go to 5 minutes. And then double click the side right there. Yeah, or it doesn't matter. You can just make it bigger so where you can find it. I don't know. You have a lot of lines.
Yeah.
Okay, so try to find the
I
line
know where to put it.
a little higher. I think it's higher right there. WO.
Oh, okay.
Okay. So now knowing that it's so tiny, double click it again. Oh, double click the line because it's so close to your thing, right? All right, so now make the thing pink or something, all right, or yellow or something.
Okay.
Maybe click bold.
We're up and bold.
And then make it yellow or something. I think that. Let's do yellow, for example. I do pink, but yeah, I do. Okay. And make it bigger actually. It's so small on your computer, huh? Make it 12, whatever. Can you see it or no? Would you be able to
Yeah,
see
I can
it?
see it. I can
Okay.
see it.
Okay. So however you do your charts, just make
Mhm.
sure that you put that on your charts however you want to, but to let you know the weekly started here. And I usually do when the day starts too. So you do weekly and then the daily, and then it lets you know, okay, are we trending or not? Okay. So now we know the whole week we're all below it. So you're not knowing not to just you see how far it is away. So we know we're in a downtrend. So I'm just targeting short-term highs. They're called intermediate highs. That's all I'm looking for. I'm not looking for external highs. I'm looking for just small highs because we're in a bearish scenario. Okay. We could be bearish next week because we're so close to support. Right. And once that support breaks, just continue to leave that support there next week. And you can show me your chart next week to see how that support held. And if it breaks, we can really drop.
This support?
Yeah, that's our support. That's our 4 hours.
Okay.
So that we know that like let's just see how price where we open up, and if we break down there, we can really drop off a lot, right? So that's why that's our last line. That's our last fair value gap before the next fair value gap. So,
Wow.
so that's how I use it. Okay, I get liquidated or stop out a lot though. Okay, should I use? No, should I look for trades on the 4 hour? Okay, so somebody asked in the chat, 4 hour. I'm using these zones to give us a structure, but you could still use the 5 minutes and 15-minute fair value gaps for support and resistance when you're day trading. So the range isn't so wide. So sometimes a 4 hour fair value gap will be like 100 points. So knowing that, we go to like a 30 minutes or 15 minutes to make it like more of like a 20 point, 15 point range to give you an idea of so you could have more realistic stop loss actually. So, and even the 1 minute fair value gaps work a lot too when you're day trading. But this is just to give you the support, Ron. So I give you support resistance. And once those support are broken on the bigger time frame, that's when you have to keep zooming out to look, okay, is it really looking like a big candle creating a fair value gap, breaking this fair value gap? That's the inverse fair value gap. So that's your job to be doing that, right? And that's another example. You know, you could check your work. You see how those fair value gaps are respected, and that's how you would use the smaller time frame fair value gaps to support your bigger time frame fair value gaps.
Are these accurate?
Yeah, let's zoom in and take a look.
Oh.
Zoom in real fast. Take a look. Why were they created? Why are they? And you see how we swept inside fair value gap on the top? You see how we double topped right there? No lower, no lower. That fair value gap was created, and then we created a high. That's the first liquidity, and we double topped it, and we came down. You see that?
Here.
So that's what we're looking inside fair value gaps. We're looking for sweeps inside fair value gaps to continue the trend. That happened again, right here. Fair value gap created. We didn't ever close below it. I mean, we never closed above it, which is why it's still there.
It's still there. Okay. Okay.
Say 4 hour to get bias short long, then entries on 5 minute, 1 minute, depending how it is responsible. It's yes, or you could use that as a target because you know we're gonna keep going down there. So if you see a 4 hour fair value gap there and we keep dropping, that can help you with your bias that like we still have room to go. That's why a lot of times you hear people say, oh, we still have room. What does that mean? Because we still didn't take out our targets, which is the fair value gaps or liquidity. Okay, so yeah, you have a lot to work with now. And I think that a lot of people probably could learn from what they see. So we
So
could
what
probably
should we
do more of
do?
this too. Yeah, we could do more of this. I like this. I like
Yeah.
that. Are you using inverse fair value gaps for continuation and reversals? Are you using inverse fair value gaps for continuations and reversals? When if I'm bullish for this situation right here, I would want the bearish fair value gaps to get inversed. Does that make sense, Renee? I want bearish fair value gaps to be broken if I'm bullish. And if I'm bearish, but if he keeps getting respected, maybe I don't have the right thesis. And that's what the fair value gaps let you know. Or we could just be chopping and it's your responsibility to see if we have liquidity on the top and bottom to just stay away until one of them gets taken. Because we need a sweep in order to change direction. And if you see liquidity above and below, and you see a bunch of little fair value gaps in between, you're getting confused, then that means you got to wait for price to finish accumulating. And then that's where the accumulation, manipulation, distribution. You got to let the chop finish, a manipulation to happen so we can run. And that's why it's important to not trade when you see a pennant. I always say that when I see a pennant, I try not to trade or I'm going to get wrecked. So price moves towards fair value gaps and liquidity. To answer Ron's question, both of them. It does. Price moves towards rebalancing to equilibrium, which is why I use the fibs. Price moves towards liquidity, and price moves towards fair value gaps, which are called inefficiencies. And when it's not doing any of those threes, price is chopping and it's generating liquidity. Okay, so those are the 4 things that we look for all the time. Okay, all right. I guess that's we covered a lot. I think that's it's a good good start of the month.
So what should we do to prepare for tomorrow?
We want to mark out where the weekly open starts in a couple hours. That's number
Okay.
1. And
Okay.
we want to always look at the bigger time frame. So if you look at let's just take a quick look at the let's take a quick look at the daily real fast before so we can finish up. So reset chart view. Okay. So where is liquidity on, you know what, you could delete your whole entire chart. You could just right click and just do remove drawings because we have this on recording. Okay, so just looking at here, where does price look like it is heading on the bigger time frame? Where's liquidity
Ooh.
on the bigger time frame?
We got a green candle. Um,
Remember, liquidity is only the wicks. So where do you see the swing high and the swing lows? Where do you see swing highs and swing lows? Right there, right?
Yeah.
Okay, so just draw one horizontal ray and the lowest one up there. Okay, so that is liquidity. Okay, and where's the highest liquidity? We always the market highs and lows.
Okay.
So take another horizontal ray, and then take a high that was not taken out yet. Okay.
Here?
Yeah. And the reason why I want you to have your magnet on is because I don't want you to accidentally miss.
Yeah.
So let's take the corners and tap them into our liquidity. No, it's fine. You can just take it and drag it on there. There we go. And the bottom too. Okay. So those are your two liquidities, right? And if you look, the bigger time frame draw is the all-time highs. That's the bigger draw to try to all-time high. But we are retracing. So where can we retrace to? Our goal is to try to find out what we need in order to go long and take us to all-time highs. Okay. So we have liquidity below, and what I would like to see doesn't mean it has to happen tomorrow, but I would like to see price eventually come and take that liquidity that you have marked down in green and start consolidating and then push up. Okay. We do have that gap right there, the little gap where you have it a little lower. A little lower on the left side. We have a gap, left, down. There's an actual gap right the lower, that gap.
Oh,
There's an actual gap right there. So that means that we could even go even lower and then fill that gap before going to all-time highs. So we could have a lot of red heading into this month, especially us, being where we're at. But our goal is not to just be short. Our goal is to try to let it play out so we can go long if you have a long-term objective and wait for price to try to take those levels out in order to come up. Okay, so that's my goal. My goal is for us to at least get to 19,818, and that 4-hour fair value gap. The 4-hour fair value gap that you drew earlier is the support that's gonna let me know if we're gonna break and get to the 19,818. If not, I'm just gonna let more candles play out, and that's why a lot of times people say don't trade on Mondays because you want kind of price to show a direction for you to follow. Right now, we just kind of print it as an inside day. Very hard to make a prediction. So that's why we need our next candle to show us that we're going to continue down or reverse or chop.
now what about this one? Why didn't we choose that one first?
Because this is called a pool of liquidity. It's a pool of liquidity. So when there's usually a pool of liquidity, there's something called a PMG, and PMG takes out all liquidity to the highs. So we want external liquidity to be taken in order for us to change price in a bigger time frame. Because if it stopped right there, and on the weekly, go to the weekly, right? Like, go to the monthly. Actually, just click M or something on your keyboard. M.
Oh shoot,
Oh,
it's M.
oh,
Nope.
actually, never mind. You can go to the top right corner. Actually, then just scroll down to month. Yeah, see how you see that's why I put it on the low. Because it's not a liquidity on a bigger time frame.
Oh, wow.
External liquidity is.
Wow. Okay.
Okay.
Okay. That's a way to check yourself.
Mm-hmm. Always zoom out. As people say, when in doubt, zoom out. Right. That's why I put it there.
Okay.
The PMG takes out the outside of it. Right now, it's an inside month. 3 days into it, our goal is to try to break outside and then eventually come back up. Right. We need a sweep to come back up. So, yeah. So that's what my prediction is that we gotta wait. We don't have the answer and nobody does, but we try to predict it based off of our levels.
Okay. So we got some a level up and down.
We have level up and down, and right now we're inside. So inside, that's what it means, is the indecision.
So it's
Inside.
inside of this.
And our daily is inside too, you see.
Okay.
So yeah, let it play out. I think there's a couple red folder news and stuff we gotta figure out next week as well. But that's where I want price to go to. All right, another it's like almost 100, 200 points almost, right? 200, 300 points.
Mhm.
Almost 300 points or something like that, right? To the bottom. And that's very doable. We could do that in one day, but that would make it a lot easier. So now you guys know, right? When we're in a downtrend, we gotta establish our trend, our weekly bias, and then we use the fair value gaps that support our thesis, and we try to ignore the ones that are against us. But if it keeps breaking, that means that you should probably reevaluate where we're going. Okay, so I'll leave you guys at that. Any other questions?
No, that was good for me.
What,
Awesome,
the two
awesome.
green lines, what are those from? Are those from?
It's an indicator.
Value gap?
And that's a fair value gap indicator. But this is not my chart. This is not my chart. So I like to draw mine out myself.
Green line is the bigger fair value gap on a bigger time frame?
No, the green line are just the liquidity. I'm just drawing the highs and lows, right? And
Yeah.
you want price to
Open.
come and take out
Yeah.
liquidity.
Okay, gotcha.
Yeah, so that's why if you see a bunch and you see support broken, then you want to go straight for those liquidity. And if you're too late, wait for that liquidity to be taken and see if we reverse.
Is that the daily high low, or that's just from a different time frame?
Well, that is the pool of liquidity there. So if she goes to the hourly, go to the hourly. That is the external low. So if you like, yeah, that is the external. So zoom out a little bit, so you can see the bottom. The other side,
Here. Oh,
Yeah.
okay.
right there. See, so that's where I put the low because there's a lot of liquidity right there. So if we break support, then I would go for the lows, right? But you want to be trimming while all those other lows are being hit. So that doesn't mean that just because the external low is your target, doesn't mean that you cannot take a partial to protect yourself in your position while it is coming down. But every single time it hits one of those lows, you should be getting out of something. All right, 1, 2, 3, 4, 5, right? That's a PMG, right? So, but doesn't always touch it. That's why those lows were created in the first place, because they didn't always touch it.
Mhm.
But eventually it will. So that's what I have my eyes on, and we're creating lower highs. So it depends on where we open up, but that's what I'm expecting for us to, if we're looking for a reason just to take those out. Okay. So we could rip tomorrow and then eventually dump on Tuesday. That's why it's important to wait and let the structure play out, because we could rip up and come halfway up and then they just hit the discount in order to go short. So that's why we have to have all those rules. You set your targets on the daily, other time frames. Yeah. So yeah. So set your targets on the daily, or not your daily, but your structure on the daily, hourly, and then your targets are really going to be within your 15 minutes, 5 minute, because you can't go all the way to the other side. But that's giving you a thesis, because we're in a downtrend. So it doesn't mean I'm going to snipe the very bottom and go to the very high. I'm just getting a piece of the wave. So I'm using this to give me a structure, and I'm only going to capture sometimes I might even just capture 10 points and I'm done. I don't have to go straight to the target. I can just capture a couple points and then be done. And then you can just see how price ended up playing out, if it was right or wrong. And that's how you mark out if you're doing it correctly. It's all off of your predictions and then what ended up happening.
Mhm.
I was not looking at my targets that way. Yeah. Just you gotta have these types of ranges, and then just smaller time frame. How can you get there? That's the goal. Okay, so I think that's pretty good. A lot of things that people need to rewatch, I think. But I think that you got a better understanding, because when people show me their charts and it's empty or it doesn't have too much where you can explain why you
Yeah.
have those lines, it just lets you know that you just gotta just wipe everything off. It doesn't matter if it looks pretty, and try to find the important levels that was gonna help you.
Okay. Okay, so I don't need the highs and lows of the week and the daily. I need the opening.
I think the opening is a good one to start with.
Okay.
And then you find those little, you see all those little lower highs or all those lower lows that you could
Lower
use
low.
those, all those little wicks that you see that we're dropping to. You could just
Mhm.
use those as targets and then mark out your opening. Okay.
And do those on the hourly?
Well, when the
Yeah.
daily starts, in a couple hours, it'll print something and you can just use the magnet horizontal ray and
Uh-huh.
then that'll let you know where we opened. And then so for the rest of the day, like you don't have to touch it.
Okay. But
Okay.
the targets, so the daily will start right at wherever it starts.
Yeah, in a
And
couple
I
yeah.
go down to the hourly.
You go to
And
the hourly and then yeah, you try to look for the swing lows or swing
swing
highs
lows. Okay.
or swing highs.
Or swing highs.
If
And those
we're in an uptrend, it's the swing highs, right?
okay. Yeah. Yes.
Yes. So that's why all those little wicks on that we don't have any swing highs now after that big drop. We just dropped
Right.
fast. You
Yeah.
see how we just dropped and we have no highs. So we have to build some highs. That's why I think we can be a little bullish going into tomorrow, but then that might be a lower high before we dump on Tuesday. You know what I mean?
Okay.
Because we have no highs at all. So we can make highs and then you see how like the price is slowly it slowly chops up, and then you know what I mean on the left side. We consolidate a lot. So our goal is to figure out when we're consolidating, we're creating highs and lows. We don't have any highs after that big drop. It was just straight up 4 hour, 4 hour, 4 hour, 4 hour, 4 hour, 4 hour, 4 hour.
Wow, those are 4-hour candles.
Yeah,
Wow.
that's all 4 hour candles. The whole week is
Jeez.
just bloodbath, right? So that's why we need to build structure. We might be a little bit bullish going tomorrow, but because we bounce off that fair value gap, but we don't know. And that's why like, a lot of times people say if there's no news on Monday, don't trade because we have to build structure. Okay.
Mm.
So yeah, just mark it out and then keep practicing this, right? Keep practicing.
Yes.
Like you're gonna be wrong on some of your levels. That doesn't mean like you're not trying to prove anybody that you're the smartest at this or not. You're trying to figure out to where you have your edge.
I just want to be able to recognize them
Yeah,
immediately.
I have my edge,
Yeah.
and no one else. It doesn't matter. And then that's why you have this community for, so you could ask people, and instead of like, oh, and like, what's the play? It's more like, did I do this right? All right, what did I miss? Okay,
Because I never know my levels. I never know where we're going, up or down.
yeah.
The
And with
next
those
one.
levels, you see how quickly we fell down, right? Because we had so many
Yes.
targets and we swept the top already. So there's nowhere else to go but down. So we have to correct.
And
Like
I
it's
like how it respected it. It respected
Mhm.
that support.
Exactly. So just keep training your eyes to see fair value gaps. You have that indicator to just kind of check your work. But
To check my work, yes.
I advise everybody not to use indicators
Yeah.
until after you do all of this. And then your indicators will start making sense. You're like, oh, I have a support. Oh, it happens to do an EMA cross after I hit support. So that's why don't do the EMA cross until you have context. Don't do a Bollinger Bands until you have context. And don't, so do this first and then the indicators will start making sense. Because before, I think everybody starts off, someone tells you there's a secret indicator to go help you, get like best entries. And then you realize that like we were learning the wrong way. We were learning the back.
Yes.
Yeah. So I want people, the new traders here, to understand that what we went through and try to do it first. And then if you want to learn indicators, that's after you understand all the candles, market structure and, highs and lows. All those things need to be learned first.
Yes.
Yeah. Okay.
Yes.
For me, this works perfect with my strategy because I'm like a price action trader. I like to follow the money. So this right here kind of gives me indicators of when to exit, when to enter, when to take profit.
Mm-hmm.
So it gives me a better understanding of the bigger picture. So I just pretty much just added this to my toolbox, if that makes any sense.
Yes, that's how it should be, because not like you don't copy every single person's trading style, but there's certain things that somebody does that makes sense that you could add to yours because it's all personal. Everything's personal.
I think that this helped me so much because my problem was I used to enter trades and just ride them out, and whatever
Yeah.
happens now. it developed more patience because now I can literally wait for my play, and it's like I know it's coming down here, I know it's going up here. So if it doesn't
Yeah.
happen, then I never enter. But if it
Yeah.
does, then it
Yeah.
goes towards my direction.
So that's what you realize when people say patience. They didn't realize this doesn't mean you're just waiting. It means that you have to wait for something to happen.
And for the last 2 to 3 weeks, I've actually been catching. I've been trading less, but I've been catching the big drops. I've been catching the big pumps because I'm just
Mhm.
waiting for the moments. So I'm trading less, but I'm making more.
Yeah,
Wow.
that's how
Nice.
it should be. Yeah, it
Congratulations.
should be. You make 100 trades, that means that no one's perfect. So you're gonna make one mistake, and that might affect your emotions, and it just starts compounding, you know. And
Yep.
in order to not do that, you got to make less trades because then you can not feel embarrassed to journal. If you took 100 trades, how are you gonna journal? You're not gonna want to. It's like I don't want to input all this data. It's like so much work. But you took 2 trades, you just go over real fast. Okay, I saw this, it made sense. Okay, I missed this. And that's why it's important to understand this and make less trades. That was the best point he made. Less
Yes.
trades, more.
And touching off your point, now that I trade like this, I eliminate everything off my chart. The only thing I have is what I'm going for the day. I do put my EMA 230, but I
Mhm.
only use that when it's like all like it's all happening together. It's like is trading in a fair value gap. It's about to bounce. There's a wick. So it's like, oh, and it's also hitting the EMA. So it's like I'm able to make a better decision on what's happening rather than rely on the EMA. Like he's
Yeah,
I have all the information. Now it's like, okay, let's see if the EMA is playing. Okay, it is. Okay,
I'm
boom.
fluent. Yeah.
yes. That's now like it's now when I see like we're downtrending and then I pull up the 921 EMA that I have, and I'm like, oh, every single time now it hits there. But when people were explaining that before with no context, I'm like, why didn't it work? But now you see it working because you have your bias. You're like, oh, we're supposed to dump right now. Oh, and it keeps rejecting the EMA. It's gonna dump again. And it keeps working. You're like, oh, I can visualize this now. And
For me,
it all starts with that, the understanding.
for me now, the bigger the candle, the better expectation of a better trade. That's how I see it. It's like if I see big candles, I know that later on, something's gonna give. If I see bigger wicks, it's like okay. It's like it kind of puts a smile on my face. It's like okay, we bouncing here, so either we coming back or we rejecting. So it's
Mhm.
like, the bigger the candle, the more excitement it is for me because it just tells me we're either gonna come back up to that or we're just gonna keep dumping the same way until we start losing momentum. So
Yes.
for
Yes.
me, this trading style is like I've been trading for like 5 years and I've developed different strategies and
Yeah.
I've tried different ways. But what I've learned is you have to kind of understand what type of trader you are and
Mhm.
then take a little bit of everybody else and kind of piece it all together until you develop who you are as a trader. And right now, this trading style is my favorite. Like it eliminates stress. It takes away from me entering, exiting randomly. Because I remember
Yeah.
I
Ooh,
would
yeah.
enter and it's like, oh, it's going up, and then I would enter again, and it's like, it went back down. So then I'm losing both ways, and I'm like, man, I'm going up and down, and I'm still losing. With
Yeah.
Yeah.
That's me.
with this, it's like I'm more patient now. It's like, okay, I'm waiting for these levels. Oh, it almost hit. Well, that didn't count. It has to hit. So it's like I wait for the levels to hit, then I make my decision. So
Man, and that makes me happy that you said all those things, man.
Yeah, definitely.
You're the patience part. It has to, and this style creates rules. So if if you did something wrong, did you follow all the rules? No. So that's why I like using some of the ICT strategy concepts because one thing has to happen in order for another thing to happen. You need a sweep or you need a rejection of a fair value gap. Those things matter because it's gonna help guide the price to where you want it to go. It's not just based off of, oh, it can go up and it can go down.
let's just say this though, just to give you some pointers. You are an amazing teacher. The way you break it down for me is so simple, but yet it's like I understand everything you're saying. So your teaching style is amazing. I commend you.
Absolutely. Absolutely. I agree.
I appreciate it, guys. That's why I'm here. And pouring into you guys as much as I can because I mean, I was in the same situation too, you know. I feel like it's frustrating and there's not really an answer. Everything that I've always tried to search for, that I think that they try to leave little things out so you can always feel like you need more. But now that I have the information, I think that a lot of the stuff that the people are teaching now are unnecessary. You know, you just gotta simplify your trading because it's already hard.
Yeah, that's where I'm at now. Like when I started with your classes, it's like, okay, let me take out the RSI, let me take out the MAC, let me take out the VY. I had everything on my chart. I was like, look at this. But now it's like just my lines. That's it. And like I said, here now and then I might use the EMAs, depending on how we
That's
trade.
okay. That's okay. Yeah, I commend people for using it, but like I said, it's always has to. You gotta tell me why first.
Yeah, for
Mhm.
sure.
Yeah,
Sure.
that,
I've
that's
definitely been more
This is gonna help.
I would say this for anybody listening, don't ever try to time the market, just spend time in the market, and if you do that, you understand how the market works.
yes. Yeah, man, you dropping gems, man. That's why
Yeah.
I advise people to paper trade first. Paper trade is okay because I want you to figure out if you're right or wrong on your decision making before you see any type of money making that decision for you, because you could also be wrong and you made money, and you could also be right and lose money. But I want you to understand it so the money's not involved, so you're not feeling greed, fear, all this negative anxiety and stuff. Because if you follow your rules, you're gonna be wrong, but you're gonna be at peace.
Yeah, for sure.
Thank you. Thank you for that.
Yeah, I mean, I'm learning from you guys, like I said, just spend time in the market and you start understanding how things work. Don't try to time it because you could never get it. Even the best of us haven't been able to get it. It's all about spending time on it and understanding, learning, and then capitalize, because you can make money on the way down, you can make money on the way up. So I don't believe in a bad investment. I believe in bad investors. So it's all on how you decide to make your money. You know what I mean? So you just got to keep putting in work until you get it. That's all it takes. I tell this everybody when I talk to people. When I show people my account, they're like, "Oh my God, let me get in. How do you do it?" And I always tell them, the very first steps is about the profit is you. You're the one learning, so that is your profit. You invest in yourself and you learn, and then you put it to play, and then you understand why you're playing, what works and what doesn't. It might not work now because you don't have the full picture, but then you understand it more and more the more you spend time in it. That's it.
Yeah, and it should be like boring, like a job. Like if you go to your work, you're not always trying to think, oh, what can I do new? What's this new, the best way I could do it more efficiently, right? You you know what to do, and you don't try to overdo anything, right? But you're doing every single day, and it should feel like that. It shouldn't feel like when you're trading, oh, I feel super excited, I feel super sad, I feel super excited, because that's not how work should be, and you want this
Yeah.
to be work, right? So you have to try to like figure things out in a slow, gradual way, because you're gonna keep punching in every single day, right? And so that's the screen time. You just gotta punch in every single day. You
Yeah,
try
yeah,
to not try to be too high or too low.
yeah.
Okay.
Well, I
All right.
appreciate you, man. Thank you for your time.
You're welcome. I'll be here on Friday, but I'll be dropping stuff in the chat. And for the people who are in the mentorship, just DM me, and we'll do some that I haven't done the one-on-ones with yet. Bernice, I still got one with you. So
Yeah.
okay. But yeah, thanks guys for hopping on.
All right,
Thank you.
have a good evening.
Have a good one, guys.
Bye-bye.